Okay, so today we're diving into property investment. And I know that a lot of you out there are curious about this. We hear all the time it's a path to wealth, building wealth through property. But what if you don't have like a ton of cash just sitting around? That's what we're going to be looking at in this deep dive. We're going to be unpacking some insights from LJ Hooker. I'm sure you've heard of them.
Yeah, big name in real estate.
So we'll see what they have to say about getting started, even if you know your budget's a little bit tight at the moment.
Yeah, it's interesting, right? This whole idea that you need to be like wealthy to invest in property, it's so pervasive.
Mhm.
And we're going to be debunking that myth today. We're
Right.
going to explore some strategies that can help you get started, even with, limited funds.
So to start off, LJ Hooker makes it pretty clear you don't have to be a millionaire to get into property. It's all about having a strategic approach and a solid financial plan. But let's get down to like the nitty-gritty. How much do you actually need to start? Well, they say that, Jeff Chapman, the head of product marketing at LJ Hooker Home Loans, suggests aiming for a 10-20% deposit.
Okay, so 10%. And that deposit, now that can come from a few different places. It could be cash that you've saved up, or here's where it gets kind of interesting. It could be equity that you've built up in a property that you already own.
Oh, interesting. Okay.
Yeah. So equity is basically the difference between what your property is worth and how much you still owe on the mortgage.
Okay.
So let's say your home is valued at $500,000 and you owe $200,000 on your mortgage. That means you have $300,000
Wow.
in equity. And you can potentially use that equity to secure a loan for an investment property,
So it's like your existing property can become
Mhm.
a stepping stone.
to building your real estate portfolio.
Exactly. Okay, so before we jump into all the different strategies, let's just take a step back and talk about the big why. Why is real estate such an attractive investment in the first place?
Yeah, I mean, there are a few key reasons. Unlike stocks or bonds, real estate is what we call a tangible asset. You can see it, you can touch it, and you know it has like intrinsic value, right? So it provides a sense of security for a lot of investors.
It's not just numbers on a screen. You're owning an actual piece of the world.
Yeah, exactly.
But it's also about the potential for growth as well, right?
Absolutely.
Yeah.
Property values tend to appreciate over time. So, your investment can grow significantly. And plus, you have the potential for what we call passive income through rental payments.
Yeah.
And there can be some pretty sweet tax advantages as well.
All right, so we've established real estate can be a solid investment, but what if we're not talking about, buying a multi-million dollar mansion? What are some strategies? For the average person who's working with a limited budget, LJ Hooker has some pretty clever hacks for that.
Yeah, they do. Um, the first one might surprise you. It's converting your current home, so your primary place of residence,
Mm-hmm.
into a rental property.
Oh.
So imagine this. You're living in your house.
Yeah.
You're building equity.
Mm-hmm.
And then, boom, you turn it into a source of passive income.
So this isn't about buying a fancy new place to live. This is about strategically using your existing property
Yeah.
to generate income.
Yeah. Leveraging what you already have.
Yeah.
Another strategy is the owner-occupier approach. And this is where you buy a property, you live in it for a period of time, often, 6 to 12 months to qualify for some of those.
Mhm.
First-time buyer incentives or lower interest rates.
Yeah.
And then you rent it out.
So you're kind of getting a win-win, especially if you're strategic about it.
Exactly.
Property.
Speaking of strategy, one approach that's becoming increasingly popular
Mm-hmm.
is rent vesting.
Rent vests?
Rent vesting.
Okay, tell me more.
This is a clever way to get your foot in the property door without having to compromise on your lifestyle. So essentially,
Mhm.
you rent where you want to live. So that might be, a trendy neighborhood or a central location.
Yeah.
And then you buy an investment property in a more affordable area with strong rental demand.
So you're getting the best of both worlds, living where you love, but also building wealth through property.
Precisely. And remember, we were talking about getting started with
What?
limited funds here. So what if you don't have that, 10, 20% deposit on your own?
Right, because let's be real, saving that kind of money can be tough, especially with the cost of living these days.
Yeah, for sure. Well, that's where joint ventures come in. You can think of it as teaming up with a friend or a family member, even a trusted business partner, to pool your resources and buy a property together.
So two heads are better than one.
Two wallets are better than one. I like that.
Exactly, yeah.
You can combine your financial strength, you can share the responsibilities, and potentially get into the market sooner than you could on your own.
Now, what if someone's interested in real estate, but maybe they're not quite ready to dive into the world of property management or joint ventures?
Yeah.
Yeah.
There's always the option of investing in what we call REITs, real estate investment trusts. And these are companies that own and operate income-producing real estate, like shopping malls, office buildings, apartment complexes.
So instead of buying a physical property, you're buying shares in a company that owns properties.
That's it.
Okay, that sounds a lot less hands-on.
It is. It is. And what's interesting is that many people already have exposure to REITs through their superannuation funds.
Oh, interesting.
But you can also invest in REITs directly, so it adds another layer of diversification to your portfolio.
And speaking of superannuation, did you know there's actually a clever way to use your super savings to buy your first property?
Oh, tell me more.
It's called the First Home Super Saver Scheme,
I've heard of this.
or the FHSS.
FHSS, okay.
It allows you to make voluntary contributions to your superannuation fund and then withdraw those contributions, along with any earnings they've generated, to help you with a deposit for your first home.
So it's like giving your savings a turbo boost,
Exactly.
but you're still benefiting from the tax advantages of super?
Okay, this is all starting to sound a lot more achievable than I initially thought. But let's be realistic. Even with these creative strategies, saving for that deposit, whether it's 10% or 20%, can still feel like a really daunting task.
You're absolutely right. It takes discipline and a little creativity. But think about it this way. It's all about making small, consistent choices that add up over time. Instead of that, daily takeaway coffee, pack your lunch a couple of times a week, those small savings can actually make a big difference.
Look after the pennies and the pounds will look after themselves.
Exactly. And if you're feeling really ambitious, you could even consider refinancing your existing home loan, potentially get a lower interest rate, or even switching to interest-only repayments for a period of time. This can free up some extra cash flow that you can redirect towards your investment goals.
It's all about being smart with your finances, looking for opportunities to create that financial wiggle room. But even if you got the money sorted, there's a crucial mindset shift we need to talk about. This isn't about finding your dream home with the, perfect kitchen and backyard. It's about thinking like an investor.
That's such an important point. Too often emotions get in the way of sound investment decisions. We need to take off our home buyer hats and put on our investor hats.
So how do you start thinking like an investor? What does that even mean?
It means detaching from the emotional aspects of property and looking at it through a purely financial lens. It's about analyzing the numbers, understanding the market, and making decisions based on logic and potential return on investment.
So what are some of the key things an investor would consider?
Well, location, location, location. Still the golden rule we need to think about. Access to amenities, transportation, potential for growth, and the overall desirability of the area. So you can imagine an area where a new train line is being built or a major hospital is being developed. Those kinds of infrastructure projects can really drive up property values in the surrounding area.
So it's about looking beyond the current state and anticipating future trends.
Exactly, and beyond location. You need to think about the type of property that will appeal to your target market. Are you looking at apartments, houses, townhouses? Each has its own, pros and cons. And it's crucial to understand the dynamics of a local market.
So we're not just falling in love with a charming cottage. We're thinking about what's going to rent well and generate a solid return.
And what else is crucial for attracting those all-important tenants?
Yeah, what else?
Tenant appeal. So think about features that make a property desirable. In-suite bathrooms, internal laundries, pet-friendly options, energy-efficient appliances. These are the things that will attract quality tenants and keep your rental income slowing.
So it's about finding that sweet spot between what renters want and what makes financial sense for you as an investor.
Precisely. And remember, this isn't a get-rich-quick scheme. Property investment is a long game. Patience is key. According to L.J. Hooker, most investors hold on to their properties for 8 to 10 years.
So it's about weathering those market fluctuations and focusing on building wealth over the long term. But we all know real estate can be a complex world. There are so many things to consider. From financing to legalities to market trends, it can feel pretty overwhelming.
Yeah, you're right. It's crucial to seek advice from specialists. So lending experts, real estate agents, and financial advisors. They can help you navigate the complexities, understand the risks, and make informed decisions that are right for you, your individual circumstances.
So we've been talking about thinking like an investor instead of a home buyer. But what does that actually look like in practice? How do you actually go about choosing a property that's going to be a smart investment?
Yeah, well, it all starts with really understanding your financial situation. So you know how much can you realistically afford to invest What kind of returns are you hoping to achieve, and how long are you willing to hold on to the property? These are all like really crucial questions to answer before you even start like browsing real estate listings.
Yeah, I can see how getting clear on those things up front could really help avoid getting caught up in the excitement of property hunting and maybe making some impulsive decisions.
Absolutely. It's about being strategic
Yeah.
and aligning your investment choices and with your overall financial goals. And then, of course, you can't forget about the golden rule of real estate: location, location, location. L.J. Hooker really drives this point home.
Yeah, because even the most beautiful property in the wrong location could end up being a financial flop. So what are some of the key factors to consider when you're actually assessing location?
Well, you want to think about things like access to amenities. So are there good schools nearby? Parks, shopping centers, these are all things that make a location more attractive to potential renters. And don't forget about proximity to employment centers. People want to live close to where they work. So being near major business districts or industrial areas can be a huge plus.
Yeah, it's all about convenience and lifestyle, right? And people
Uh,
are willing to pay a premium for that.
exactly. And then there's transportation. Is the property easily accessible by public transport? Are there major roads or highways nearby? Good transport links can significantly impact both rental demand and property values.
And I imagine it also affects the type of tenants that you attract. So, if a property is well connected to public transport, it might appeal more to young professionals or students who don't rely on cars.
That's a great point. Understanding your target market is crucial. When choosing a location, remember we talked about thinking like an investor. That means looking beyond the present and anticipating future trends.
So it's not just about what the area is like right now. It's about what it's likely to become
Exactly.
in the coming years.
Is there new infrastructure planned for the area? A new train line? A shopping mall? These kinds of developments can have a massive impact on property values. Even something as simple as a new park
Mm.
or a playground can make a neighborhood more desirable and push up rents.
So it's like being a real estate detective,
And love them.
looking for those clues that indicate future growth and desirability.
It's about spotting the potential that others might miss. And once you've kind of narrowed down your location, it's time to start thinking about the type of property. That's going to be the best fit
Yeah.
for your investment goals.
Okay, so we've got apartments, houses, townhouses. What are some of the key considerations when making this decision?
Well, it really comes back to understanding your target market
Hmm.
and your investment strategy. Apartments tend to be popular with young professionals, students, singles, who are often drawn to the convenience and lower maintenance of apartment living.
And I imagine apartments can be a good entry point for investors with limited funds, as they're generally more affordable than houses.
That's right. They can be a great way to get your foot in the door of the property market without breaking the bank. Houses, on the other hand, tend to appeal to families who are looking for more space, privacy, a backyard for the kids.
And houses often have more potential for capital growth, especially if they're on a decent-sized block of land.
Exactly. But they also come with higher maintenance costs and can be more expensive to buy up front. Townhouses offer a sort of middle ground, combining some of the benefits of both apartments and houses.
Yeah, they often have a bit more space than apartments and can come with, small courtyards or balconies, but they're typically more affordable than freestanding houses.
Right. And they can appeal to a broader range of tenants, from young couples to small families. The key is to do your research and understand what type of property is in demand in your chosen location.
So we're not just picking a property type that we personally like, we're thinking about what's going to be attractive to those renters.
Exactly.
Generate the best return.
And you don't have to limit yourself to just one type of property, diversifying your portfolio with a mix of different property types can actually be a really smart strategy. It can help mitigate risk and potentially increase your overall returns.
Spreading your eggs across multiple baskets.
Exactly.
That makes sense. But let's not forget about the human element of all of this. We've talked about location, property type, investment strategy. But what about the actual experience of being a landlord?
Yeah, that's a crucial aspect that often gets overlooked. Remember, when you invest in property, you're not just buying bricks and mortar, you're becoming part of a community, you're providing homes for people. And that comes with a certain level of responsibility.
Yeah, it's not just about collecting those rent checks. It's about creating a positive experience for your tenants and ensuring that they have a safe and comfortable place to live.
And that requires clear communication, responsiveness to their needs, and a willingness to address any issues that might arise. Being a landlord can be challenging, right? I imagine there are all sorts of unexpected situations that can pop up.
Oh, definitely. From dealing with, late rent payments, to handling maintenance requests, to navigating tricky tenant situations, being a landlord can be a real test of your patience and problem-solving skills.
And that's where having a solid lease agreement in place is crucial, right?
Yeah, absolutely. A well-drafted lease agreement protects both you and your tenant, outlining everyone's rights and responsibilities. So it covers things like rent payments, lease duration, property maintenance, the rules around pets and guests.
So it's like a roadmap for a successful landlord-tenant relationship.
Exactly. It sets clear expectations from the outset and helps prevent misunderstandings down the track. And, if the thought of handling all those landlord duties feels overwhelming,
Yeah.
there's always the option of hiring a property manager.
Oh, right.
They can take care of everything from finding tenants and collecting rent to managing repairs and dealing with any tenant issues that might arise.
So it's an additional cost. But for many investors, it's worth that peace of mind.
Absolutely.
Yeah.
It allows you to enjoy the benefits of property ownership without the day-to-day hassles of being a landlord. But whether you manage the property yourselves or hire a professional, it's important to remember that being a landlord is an ongoing responsibility.
It's not a passive set and forget type of investment. There's always something to be done. From routine maintenance to addressing tenant concerns, staying on top of market trends,
Yeah.
LJ Hooker recommends, setting aside a financial buffer to cover those unexpected expenses.
That's excellent advice. Things like repairs, vacancy periods, even changes in interest rates can impact your cash flow. So having a financial cushion can help you weather those storms and protect your investment.
So we've covered a lot of ground today. From location analysis to tenant appeal, the realities of being a landlord, it's clear that property investment requires careful planning, research, and a long-term perspective. But remember, you don't have to do this alone.
There are so many resources available to help you on your property investment journey. From books and online courses to financial advisors and real estate professionals, don't be afraid to ask for help and tap into the expertise of those who've been there and done that.
Yeah, it's all about building your knowledge, surrounding yourself with a supportive team, and making those informed decisions that align with your individual goals. And sometimes the best way to learn is by hearing from others who've already achieved success in the world of property investment.
Absolutely. Hearing real-life stories can be incredibly inspiring and provide valuable insights that you might not find in textbooks or online articles.
Exactly. So we've invited a special guest to join us for the final part of our deep dive, someone who has built a successful property portfolio from scratch and has some incredible tips and strategies to share. Welcome back to our deep dive into property investment.
Yeah, it's been quite a journey so far.
It really has. We've, busted some of those myths, explored some creative strategies for getting started, even with limited funds, and even delved into the nitty-gritty of location analysis, tenant appeal, and the realities of being a landlord.
And through it all, we've really emphasized the importance of thinking like an investor, making informed decisions,
Yeah,
and seeking expert advice when you need it.
exactly. But sometimes the best inspiration comes from hearing real-life stories from people who've actually walked the walk and achieved success in property.
Absolutely. That's why we've invited a special guest to join us today, someone who's built a really impressive property portfolio from scratch and has some just invaluable insights to share.
So excited to welcome Guest Name to the show. Guest Name, thanks so much for being here.
Thanks for having me. Excited to be part of this deep dive.
So Guest Name, tell us a little bit about your property investment journey. How did you get started? And what were some of the biggest challenges you faced along the way?
Well, my journey started about 10 years ago. I was renting a small apartment, working a 9-to-5 job, and I was feeling really frustrated that I wasn't making any progress toward owning my own place. I knew I wanted to invest in property, but I had very little savings and no idea where to begin.
Yeah, and I think a lot of our listeners can relate to that. Wanting to get into the market, but maybe feeling a bit overwhelmed by those perceived barriers to entry.
Oh, definitely. I felt that way for sure.
Yeah.
But I was determined to make it happen. I started by reading everything I could get my hands on about property investment, attending seminars, talking to anyone who had any experience in the field.
So you really immersed yourself in the world of real estate.
I did. It was like learning a whole new language.
Yeah.
But the more I learned, the more confident I became. And I realized that property investment wasn't just for the wealthy. It was accessible to anyone willing to put in the time and effort.
That's so inspiring. But I imagine there were moments when you doubted yourself, Or felt like maybe giving up?
Oh, absolutely. There were plenty of times when I felt discouraged, especially, when I was facing rejection from lenders or struggling to find a property that met my criteria. I think one of the biggest challenges I faced early on was overcoming that fear of making a mistake. I was so worried about losing money that I almost talked myself out of investing altogether.
Yeah, fear is a powerful emotion. And it can definitely hold us back from taking risks and pursuing our goals. So how did you overcome that fear and make that first investment?
It was a combination of things, I think. I had to remind myself that every successful investor has faced setbacks and made mistakes along the way. It's part of the learning process. I also surrounded myself with a really supportive network of mentors and fellow investors who really encouraged me and provided valuable guidance. And honestly, sometimes it just came down to taking a leap of faith and trusting my gut instinct.
That's such an important message. We can't let fear paralyze us. Sometimes you just got to take that first step, even if it feels a bit scary.
And remember, you don't have to go it alone. Seek out mentors. Join online communities, connect with other investors who can share their experiences and offer support.
Absolutely. The property investment community is incredibly welcoming and generous with their knowledge. So don't be afraid to reach out and ask for help.
So guest name, you mentioned. Struggling to find a property, that met your criteria. What were you looking for in that first investment?
Well, my strategy was to really focus on cash flow. I wanted to find a property that would generate positive rental income from day one. I knew that would give me the financial security to, continue investing and building my portfolio.
That's a really smart approach, especially when you're starting out with limited funds. Did you have a specific type of property in mind?
I actually started with a small apartment in a suburb that was undergoing regeneration. It wasn't the most glamorous property,
Mhm.
but it ticked all the boxes in terms of affordability, rental demand,
Mhm.
and potential for capital growth.
So you didn't let emotions cloud your judgment. You focused on the numbers and the long-term potential.
Yeah. Exactly. It wasn't about finding my dream home. It was about finding a smart investment that would help me achieve my financial goals.
And that's a crucial mindset shift for any aspiring investor. Detach from the emotional aspects of property and focus on those financial fundamentals.
So guess name, fast forward 10 years, you've built an impressive property portfolio, starting from that small apartment. What are some of the biggest lessons you've learned along the way?
I think one of the biggest lessons is the power of patience and persistence.
Right.
Property investment is a marathon, not a sprint. There will be ups and downs, challenges and setbacks. But if you stay focused on your goals, keep learning, and adapt to changing market conditions, you can achieve incredible results.
That's such an important message, especially in today's fast-paced world, where we're often bombarded with those get-rich-quick schemes and promises of overnight success.
Yeah, property investment is about building wealth steadily and sustainably over time. It requires discipline, a long-term vision, and a willingness to ride out those market fluctuations.
Another key lesson I've learned is the importance of building a strong team of professionals around you, from mortgage brokers and real estate agents to property managers and accountants. Having the right experts on your side can make all the difference.
Yeah, it's like having a support crew to help you navigate all those complexities of the property world.
Absolutely. They can provide invaluable advice, save you time and money, and help you avoid costly mistakes.
And finally, I would say, don't be afraid to take calculated risks and step outside your comfort zone. Some of my best investments have been in properties that others overlooked or dismissed as too risky.
That's where that gut instinct comes in. Sometimes you just have to trust your intuition and go for it.
But always back up your intuition with solid research and due diligence.
Absolutely. Taking calculated risks doesn't mean being reckless. It means doing your homework, understanding the market, and being prepared to take action when the opportunity arises.
Guest name. This has been an incredible conversation. Your story is so inspiring, and your advice is just invaluable for anyone looking to get started in property investment.
Thank you so much for sharing your journey and insights with us.
It's been my pleasure. Remember, property investment is achievable for anyone with the right knowledge, mindset, and support network. Don't let limited funds or fear hold you back from pursuing your real estate dreams.
So as we wrap up this deep dive, let me leave you with this thought. What small change could you make today to start building your property investment fund? Could you set up a dedicated savings account? Research potential investment locations, or maybe even just schedule a consultation with a financial advisor?
Every journey begins with a single step.
And remember, we have a ton of resources linked in the show notes to help you explore the strategies that maybe sparked your interest today. From the First Home Super Saver scheme to rent vesting, to joint ventures and everything in between.
Don't be afraid to dream big and take those first steps.
With the right knowledge, a bit of planning, and a whole lot of determination, property investment can become a reality, even if you're starting with limited funds. So go forth and conquer those real estate goals. That's it for today's deep dive. We hope you've enjoyed this journey into the world of property investment. Until next time, happy investing.